Hello guys, Ralph Works here. Um, this is Gold Live Market Tracking episode 5. So we're looking at the daily time frame, right? How does it start from the daily time frame? And how does kind of look at the kind of PA we've been seeing on gold. First of all, if you can look at my labelings as to where stops are, again, we know stops are above this high, we know stops are above 1800, we know stops are above 1830, we know stops are below 1745. Now it's only a matter of where is price moving, in what direction is price moving. Um, if we look at where we had our sell-off from 1800, and if you look at the kind of, let's go over the candlestick patterns we are seeing, right? First of all, looking at this, we have this bullish candle into 1800. We have the spinning top candle, and then we have this bearish candle pushing down back into 1770, right? 1768. But we do have this level of support, or this level of support. This is the level where price was inducing sellers to go short initially. I was trying to go short in this level, right, from last week before we had the run to the upside. Now, this pull down into this level could be a mitigation, right? So what I mean by mitigation is the short orders that were launched in order to induce people to go short, right? They could have pulled back price and closed out all their entries, all their short entries at break even, and they could be looking to, long price to take these stops. Now, initially I was saying, okay, seeing how price is moving down, if this support doesn't hold, we could be seeing a run for 1745 for the liquidity that lies below these candles, but we didn't get that. We're seeing price maintaining bullish structure. Now, if we look at the candlestick patterns, we have bearish candlestick, we had this indecision candlestick, then we had this candle with the long wick to the upside. Now, what this tells me when I see a candlestick like this is we might most likely fill that wick and continue to the upside, right? Because this means this is an inducement also. This candlestick is an inducement also for people to say, okay, hey, maybe we can start looking for shorts. But I'm looking at the structure of the market, right? It hasn't changed still. It hasn't changed to a bearish structure still. So I'm still bullish. I'm still maintaining bullish bias on gold in the meantime. We could be going for the stops above 1800 and possibly further all the way to 1830. So currently I'm okay, this is the 4-hour time frame. We did have this break of structure where I was saying we could be coming for stops like this. I was saying, okay, seeing as we've had this break of structure, if price continues to the downside, we had our stops here, and we're saying, okay, 1745, 1745 gets hit, then we can see price roll over, claim the stops before pushing back in the opposite direction. Now, what we are seeing on gold, we had this this level of support here. It was broken and then broken back above. So this could be a false breakout, a retest of that, and now we could start to see price go long. From the price action we're seeing, again, look at this, bullish, indecision, bearish candle, right? All of these candlestick patterns are inducing people to want to go short. People want to go short from this, but we are still maintaining bullish structure. And that's one thing, we might see candlestick patterns that represent bearish structure or whatever, but as long as the structure is bullish, as long as there's no change in structure, then there's no need holding the shorts or trying to keep going short. Look at this level right here. This is a good level that if we see this level broken, we'll say, okay, now price wants to continue that downward momentum. We didn't get a break of this level. This level was not breached. This level was not breached. So what this is telling me is that the short orders from here have been mitigated. The short orders from here have been mitigated. And now we might start to see a push to the upside, 1767, 1800, and so forth and so forth. Now let me go down to the 1 hour time frame. Let's have a closer look at what we see on gold in terms of price action. Now looking at gold PA, obviously we had this level. Now look at this level, right? Boom, blown through. This was our level of support, the one I pointed out, right? This is the low. At least if this low was broken, we know that, okay, liquidity taking has started to the downside. We didn't even take this liquidity here, right? So we're maintaining that structure. We had a break of this level. We retested that, pushed down, broke our level of support. Now we had this lower high. When we had this break, we formed this lower high, inducing, and then people got taken out. And now you see the pullback on price. Again, this is to mitigate the short orders here, mitigate the shorts here, and then relaunch to the upside. So looking at gold right now, we might see gold roll to 1800. We can have this is currently my trade setup. This is currently what I'm looking at in terms of stops and all of that. And we could see to 1800 to take those stops. So we might be hunting the liquidity above 1800. Now this looks like a break of structure, right? Low, high, break of that low, right? So this can be a change in structure, right? But what I'm looking at is the bullish structure from the higher time frame. The bias hasn't really changed. The structure hasn't really changed from the higher time frame. On the lower time frame, it might look like, okay, this might be the beginning of a trend. But again, we saw this momentum on gold yesterday. Boom, from this level, drop. But again, it's not taking out these lows. It's not taking out these lows. It's not taking out these lows. So we're still maintaining that bullish bias, and we want to see, okay, what we'll get from price. What kind of price action are we going to see? Looking a bit closer at the charts, looking at the charts a bit closer and trying to dissect further, we can see that, okay, we do have another level of resistance all the way up here. If I take this line across, boom. We have another level of resistance above here, right? And again, this looks like a double top, good candlestick price action and all of that. Again, luring people into that drop, pullback, and now price wants to continue. If we take a fib, if we quickly take a fib, a Fibonacci retracement to, okay, Fibonacci, boom, all the way to this low. We are striking the 61.8 fib level golden ratio, push to the downside, refusing to break lows. What we could see from here is a push into this level. What will confirm my long bias is if we get a push into that level, right? If we get a push into that level, if we get a fall off that again refuses to break structure. If again we refuse to break structure, we get a fall, and then we refuse to break structure, and we start to see price pushing up again. So inducing more sellers, push up, then I'll be looking for a continuation all the way to 1800. So this is what I'll be looking for in order to confirm my longs and keep holding my long positions, right? I want to see people wanting to go short. I want to see price coming up to want to kind of breach this resistance level. And once we do get a close above this resistance level, that could be an opportunity to start looking to scale into the trades and ride it to the upside, especially if it coincides with our time. Let's say New York session. If we have a great setup in New York session, I'll be looking to take this to the upside. So let me go back to the 4 hourly. I want to quickly go to the 4 hourly. On the 4 hour time frame. Yes. Okay, on the 4 hour time frame, real quick. Okay. Now, if you look closely at what's going on here, again, this is where people were trying to go short. I was trying to go short from this level last week, right? Go and watch episode 1, episode 2, episode 3, episode 4, right? So you can get a good idea on how I've been tracking gold. Go back, watch episode 1, gold live market tracking, episode 1, episode 2, episode 3, episode 4. Now we can see that price is refusing to break below this level, right? Even people who are still holding, imagine you're still holding your short from gold. Let's say you sold here, right? You came in here, now you're at break even and you're refusing to close out your trade, expecting that it's going to run in profit, right? Psychologically, a lot of people have been in that situation where price runs their stops, they didn't set a stop loss, it pulls back to the break-even point, and they're still expecting price to roll over. It happens a lot. Or what we can see, it might even induce people to want to continue to go short, right? I wanted to take a short position. I did. I took a short position here. I've gone stopped out, and I'm looking at price structure. This whole mitigation, this whole consolidation here to the left, there's a lot of orders here. There's liquidity. There's orders resting here. They're picking up those orders. And from the look of things, we're going to run 1800. We're going to run these highs as well, 1807, 1810, and then we'll start going for 1830. Let me zoom out a bit. And you can see the equal highs, right? So we have 1730 all the way to 1830. That's 1,000 pips. That's a difference of $1,000. That's a difference of 1,000 pips. So yes. Gold longs is my bias for now. We're in that gold buy to the upside, and we're looking for further confirmation to scaling on the trade. Right now, I have little orders on gold. If I get that extra confirmation in London, in New York, I'll definitely be scaling up my trades, right? So I'll end this video here. This is Gold Live Market Tracking episode 5, and I'll see you guys in episode 6. We'll go over the market. Hopefully, we'll have a trade to break down. I'll have a trade to break down to you guys, explain a couple of things more. As you can see, we're just hunting for liquidity. It's very, very simple. Hunting for liquidity. What direction is liquidity? Resting. Where could the market be moving? As price action keeps developing, it starts to paint a clearer picture. So about being wrong a couple of times, it's about at least getting it right? Last week, we failed with our short trades here, but we were able to capitalize on the short trades from 1800, right? We tried to go short again, we failed. Now we're trying to make up for that by going long. So it's all about reanalyzing and following price action. Right? I'll see you guys next week. I said next week. I'll see you guys in the next episode. So subscribe, like, comment, share, recommend this to people. If you're getting value, make sure to recommend to people. Follow us on all our social media platforms, on Instagram, on Twitter, Graph FX on Instagram, Boxing Trade on Instagram, God of Mars on Instagram. All the links and all the everything will be in the description. Join our free Telegram channel as well to keep getting more updates, more analysis, and all. So I love you guys. I'll see you guys in the next episode of Gold Live Market Tracking. Peace out.